Ladies and gentlemen, my name is Ivan Maltsev and I'm a general partner at 3x Capital. Today we will have an exciting event where we will discuss several topics, including the market of early stage investments, which includes launchpads and investment platforms. So we prepared a comprehensive report, but also we have done a research on the node opportunities where our investors can participate as a validators in different networks and receive different types of rewards. It's a new fundraising method that was started, I think, in 2023, and it provides a lot of benefits for early stage investors. So we decided to prepare some research and do some comprehensive comparison regarding different types of opportunities in this area. So I'm happy to invite to the stage Steph, who will present today the research on the early stage investment opportunities in the market. Looking forward to
Thank you, Ivan. Hi, everyone. Okay, so is my piece sharing? Okay, good. Okay, let's. Hi, everyone. So let's begin this week's market research by deep diving on Launchpads and other early stage investment platforms. So, with the rising adoption of cryptocurrency and Web3 in 2024, startup projects have already raised a total of 582.44 million in 760 rounds from Launchpads. In the statistics alone, we can already see the importance of launchpads in the life cycle of a Web3 project as they launch their TGE through the public sale. And on the point of view of the investors, launchpads are platforms that gives access to retail to high risk, high reward assets through betting on the future growth and potential of the crypto startup. But first, what are launchpads? In simple terms, launchpads are platforms that cater to the project's public sale. Public sale could either be through IDOs or initial DEX offering, IEOs or initial exchange offerings, and ICOs or initial coin offering. You might already be familiar with these three common types of fundraising platforms, so let's go ahead and discuss how launchpads are distributing allocation to the retail investors. So most of the launchpads existing today are utilizing a tiered systems approach. So this tiered systems approach is where investors are categorized into tiers based on their holding amount of the launchpad's native token or prior participation on their platform. So how this works is higher tiers get larger allocations or guaranteed access. So for this example I provided here is an example of how DAO Maker does their tier based system. So for example, on their tier 1, if you hold 2000 DAO tokens, you have an estimated winning chance of 4.6%, which is very different from the tier 5, where by holding 50,000 DAO, you have a 149% of estimated winning chance. So in this distributing allocation through a tiered system, it is a mix of lottery and guaranteed allocation. So for the lottery pools, the lottery pools works by a random selection process where users participate for a chance to win an allocation of tokens. So the advantages of lottery pools is this provides a fair opportunity for participation, especially for the retail investors. Disadvantages of lottery pools is its high competition and there is no guarantee of receiving tokens. An example I provided here is the project of Origami, which launched on the Bybit Launchpad. So here you can see that there is a 35.77% probability of winning with over 27,952 participants. And then next is the guaranteed allocation that may either be through the first come first served basis or the whitelisted or through the whitelisted addresses. So first come first served basis allows early participants to secure allocations, and the advantages of it is it provides certainty for investors and it discourages immediate selling, while the disadvantages can lead to the fast sellouts and there are bots manipulating the system. The example I provided here is Polka Starter, wherein just recently they have a guaranteed allocations for their investors. And then the last type of token distribution that we'll be discussing today is the liquidity bootstrapping (LBP) or and the dynamic liquidity management mechanism. So in an LBP setting, tokens are initially sold in a pool with a decreasing price and increasing while the liquidity is increasing. So the popular launchpad doing this is Jord Foundry in Ethereum. And another similar approach is the DLMM, the dynamic liquidity management mechanism, uh, where this approach of DLMM is being done by Jupiter LFG Launchpad in Solana, where it dynamically adjusts the token price and allocation for each round of the token sale based on the market demand and supply. So the advantages for the LBP and the DLMM is it creates an immediate liquidity for the token, it discourages dumping, and it lets the market decide on the price. While the disadvantages of it is it requires more technical expertise for project teams and launchpads. Okay, so with the opportunities provided by Launchpads, I included here some issues and concerns. The first one being the business model of Launchpads, which is the token as an entry model, where tokens are used to gatekeep the public sale of the projects. The concern with this model is when Launchpad grows to a significant size, grows in popularity, with its token also rising in value, significant amount of capital is required from investors to acquire the Launchpad token, only for them to acquire a small allocation. So in this situation, it could be sort of undemocratic, with whales being able to afford the higher tiers on good allocation, with retail investors being left out with small allocations. The next one is some launchpads prioritize the hype over a project that could provide rather the hype of a project rather than its fundamentals. So the implication of this is it creates an unhealthy speculation and a false belief of retail investors that project would always launch higher than the private sale price. So given these issues, interesting developments on launchpads are the arrival of new early stage investment platforms that is introducing a more democratized way of investing with startups a more democratized way of investing with startups by giving investors access to participate in the same rounds that are being participated by the VCs. So let's have a brief overview of four projects that I've found under this category. First on the list is Angel Blocks. So out of the four projects here, Angel Block is the one that is launched on mainnet. So it aims to create a self-sufficient permissionless network for a token-based fundraising. So some of its solutions and features, the first one is its milestone-based funding. So startups are required to define their project milestones, deliverables, timelines, and they need to achieve this milestone before the tokens or the funding would be released to them. AngelBox also employs a time-based vesting. They have security through smart contracts. Although they are currently launched on Ethereum, they are planning to have their multi-chain compatibility in the future. There is also a validator system wherein these validators act as the one that performs due diligence on startups, oversee the voting processes, and ensures the integrity in the platform. And what's interesting is another interesting with Angel Block is their integration with Aleph Zero, which is a privacy focused blockchain. Next on the list is Commonwealth. So Commonwealth claims to be the world's first free VC fund. So their approach is to have this access to early stage investment opportunities through an approach that is community driven, transparent, and secured, and employs a fund based investment approach. So the solution and features. So they have this All Street oracles. So the All Street oracles are your industry experts that refers the promising projects. So they are the connectors of the projects to the investors in Commonwealth. Commonwealth also has these investment funds where projects are part of a specific fund that caters to a specific investment thesis that allows users to diversify their portfolios. Other features are the community due diligence, where users are able to participate through discussions, workshops, and voting on their favorite project on a specific fund. Another is the tokenized investment shares, where their investment on a specific fund is represented by what they call slice, or this is also an NFT that shows their ownership of that fund. And they also implement an advanced token selling algorithm where profits are distributed to investors in stable coins and not in the form of the projects that they invested in. And one interesting about Commonwealth is the royalty fee. So it introduces a unique fee structure that departs from the traditional venture capital model. It offers a tiered system with two components, which is the protocol royalty, which is a fixed fee of 2% per year, and the profit based royalty, which is a baseline fee of 40%, though by holding the wealth tokens and staking it, users are able to reduce this fee to as low as 10%. The third project is Echo XYZ. This platform is just on its beta stage platform, and it is designed to connect experienced investor with promising early stage startups in the digital space. Since it is on its beta stage, there's limited information about them, and the solution and features that I was able to get from them is the collaborative approach that they are using, which in there are group leads that organize investors, facilitating a collective investment decision and diversification. And they also have this embedded wallet feature where an integrated digital wallet service for streamlined asset management is being done. And yes, as I said, it's on its beta phase, and access to the platform is limited to selected experienced investors. And the last project that we'll be talking about is Venture Launch. So Venture Launch is a new platform built on the Solana blockchain that aims to revolutionize seed stage investing for both startups and investors. So the focus of Venture Launch is on the pre-product traction stage startups seeking funding and growth support to connect them with early stage investors. So some of its solutions and features is it also has a milestone-based investment model. It has a liquid pre-market for startup tokens. It gives access to a diverse pool of seed stage opportunities, a comprehensive fundraising and growth support to the startups, and then there's also opportunity to onboard early community for the adoption. And then one interesting about Venture Launch is the educational resources for the early stage investors to make informed decisions before they deploy their capital to their favorite project. So Venture Launch is yet to launch, so you can follow their Twitter page for further updates. And and to conclude my article, the crypto early stage investment space could be full of opportunities for investors. Final word from me is to always do your own research and look beyond the hype of a project. Also, prepare risk management for your early stage investments. Get to know the vesting period if there would be one, and also check for the mechanisms employed by your chosen launchpad before deploying capital. And that's it for me. Turning over back to Ivan.
Yeah, thank you. Thank you, Steph. Super interesting. I'm curious to hear your thoughts. What is the best approach that we have right now in the market in terms of the participation in the Launchpad? So, what type of approach do you prefer, and you can suggest to maybe our community also um, to use?
For me, I think the best opportunity for early stage investments could be through Angel Box, since it's the one that is currently launched under mainnet. As early stage investors are provided with the opportunity to co-invest with the VCs who are participating in the earlier stage rounds, which are your pre-seed, seed stage, rather than going for the public sale. The So what I said is that the current issues on the public sale is that it's gatekeep by the Launchpads tokens. So it could be either allocations would be provided through a lottery-based methods, or you need to deploy a higher capital just to have that guaranteed allocation for a specific project, and then just to have a small allocation while deploying that large capital just to purchase the tokens of the launchpad.
Okay, interesting. And what do you think about the model, like a pre-funding model, where an investor should put some amount of USDT and then receive a part of the investment from this amount of USDC? So right now, I know that DAO Maker has this model as one of the models that they use. Um, do you like this model, and what are the um, cons of it?
For this model, I think it's also the same model being employed by most launchpads. And again, I think it could be it could be the best way for the public sales to be done at this time. Though I think the disadvantages part of it would be for the retail investors who doesn't have that enough capital to participate on this uh, specific races for their public sale of projects.
And have you reviewed the meme platform where people are staking meme coins that are listed on Binance, and after this, farming stakes, and stakes are used to invest in the project. Plus, they are doing social media activities at the same platform, and for these activities, they earn additionally some stakes.
Yeah, I think it's also interesting. Users are able to use their existing assets to earn more assets. So it's like a yield farming strategy for them. But instead of earning the same asset, you're earning a different asset. So I think it's rather interesting.
Yeah, I like the approach with social media participation in the projects. So instead of just providing them the funding, you are subscribing, supporting
Mhm.
them, reposting maybe some content. So the projects receive some additional outreach through the network of the investor. So that might be something that we should think in the venture launch perspective in the future. So
Agree.
Mm, yeah, good point. Thank you for the presentation, Steph. It was really insightful to learn about the fundraising during the Q1 through Launchpads. I couldn't imagine that 600 or something sales were done just in 3 months.
Yep.
That's impressive amount. So thank you, and let's prepare for this for the next one. market research. And now I would like to introduce Slava, who will present today an insightful report about node investments, this type of exclusive opportunities that were introduced only during the previous year. The opportunity to invest in node keys that Slava probably will explain in details today. So Slava, the stage is yours.
Sure. Thank you very much. So let me share my presentation. So overall, what is the node investments? And I think some of you have already heard of them. If not, today we will deeply cover what is it, why is it happening, and what opportunities it grants us as a Web3 community and active investors. So first of all, what are the node sales and how basically they started? Overall, the nodes are the critical part of any blockchain infrastructure. They're needed for every blockchain network in order to perform validation tasks. So, for instance, in Bitcoin, nodes are computing hard mass problems, and then you receive blocks when you solve them. In Ethereum, you do it through staking mechanisms, and there are other validations form, but overall it's all done by the nodes and basic infrastructure. And before the node sales, running node was a technical task. Because it's needed to be careless. It needed to be managed by a professional who understands what is it, updated and monitored, maintained. However, in 2023, it's in the end of previous year, it's changed with several new opportunities for the community. It was a node sale, and today we will briefly cover the biggest till today and some new opportunities. But overall, the node runners weren't so popular back in the day, so they were receiving their chunk of rewards. Of course, all the fees you're paying are going to them, and that was the idea. And sometime before, we will right now cover a couple of projects. The first one will be Xai. In the end of 2023, they have offered the one of the first node sales. So Xai itself, it is a gaming layer 3 infrastructure on top of Arbitrum, and they have granted 50% of supplies to it node operators. And at first, it seems like a huge amount, but then you understand that basically they were planning to raise the part of their funds in total from this node sale, and this was one of their approach. In total, they raised over $40 million doing this in Ethereum, and they have sold high amount of nodes to users, and they are already running. Also, they have airdropped over 1 million tokens to those who purchased the nodes. So you can already see that projects are rewarding those who trusted them in the beginning, bought nodes. So in order to make it as an additional layer of incentivization, they airdrop tokens as well to those who bought nodes. So basically, when you buy a node, you receive a node key, which will grant your wallet a possibility to be connected to the node, which you can install and run. That's the basic idea. The second project, and I think till today, is they have made the biggest sale so far, node sale so far. It's Aether. They had a big round recently with over 40,000 Ethereum raised. It's $120 million with today's rates. I believe it was higher back in the day, and they raised it just 1 month. So comparing to Xai, they raised $40 million in 3 months. Acer raised $120 million in 1 month, and this is huge numbers. So talking about it, also there is, so Acer itself, it's a cloud computing protocol. It's a base infrastructure protocol for other to use. Basically, you're able to take a software there and a hardware there and run needed task to perform different computations, etc. And it's really needed niche in Web3 with AI technologies coming to Web3. There is a lot of computations and calculations needed. That's why the demand for such projects are rising. And another project who done a huge node sale recently was the Sophon, and recently we have covered the investment in it. So we were participating in their node sale round as well. They have raised 20,000 Ethereum. It's $60 million in less than a month. So it was a recent sale, and till today they have raised 20,000 Ethereum in less than a month. So let's more deeply cover Sophon because we were investing in it, and we can describe the project more in details with some insights which we had during the investment in it. So yeah, 2 weeks ago we have announced that we have participated in their sale. So sale has happened less than months ago, and overall the Sophon is layer 2 blockchain platform built as zkSync hyperchain with Celestia as its data layer for community. It is a community-driven ecosystem for entertainment, gaming, and basically not only gaming but entertainment in general. They're backed by top-tier investors as Matter Labs, so they have strong connections to Matter Labs. Their founder is he was head of Web3 in Matter Labs. So Matter Labs are those who develop zkSync. And Merit Circle, they are developers of Beam ecosystem. It's also an infrastructure project for community-driven infrastructure project for entertainment. They had over 2 million website signups and connected wallets at the moment of node sale. And also they have raised around $10 million before the node sale. So you can already see that such type of projects at first glance, if you will just check their fundraising data, you will see that they raised $10 million from even top tier investors, but still the round wasn't as big. However, when you take into account the node sale, you understand that they raised in total more than $70 million right now. And they plan to have launch in Q3 2024 with incentivization program before the launch. So let's go to and let's cover some deal aspects, what we had and what the terms basically was. So those who were participating in node sale are receiving node keys. As I mentioned before, basically they grant your wallet a possibility to run a node, basically to validate the network. And the basic term is you receive these keys with 1 year lockup before they become fungible. So at first they won't be fungible. You cannot transfer them and sell them. For instance, with Xai, we had seen the secondary market evolved around this. So some node keys were unlocked and people could trade them already. So basically there is a first opportunity of exit, as you can see. So by just purchasing a key, you have a possibility to sell it. And right now projects are reviewing it, so they are putting lockups on it. Also, some basic rule of thumb for majority of node sales are tiered sales structures. So basically there is some number of tiers which grant different node prices, valuations. And for instance, in case of with Aether, the valuation were ranging from $130 to $3 billion. As you see, it's a huge range. And as we will see later today, comparing other projects, the range can be even wider. And basically, it will reflect just your possible upside while investing. So it should be carefully calculated, assess the risks, and you should assess the risk and do your own research to understand at which valuation it is plausible for you to join the round. Also, for instance, with case of Sophon, 20% of whole token was dedicated to node operators with a 3-year lockup, basically, with quarter-to-quarter unlocks. What does it mean? So from the start of the network, from the mainnet, as soon as nodes are starting to validate in the network, every 3 months will be a reward generation event, basically, which will be distributed to the wallets, and that will be vested over 3 years. And comparing to other projects, there is important notice regarding the Sophon. So the investors, for instance, had a similar lockup, but they had a just full-fledged 1-year lock, comparing to node operators who doesn't had this lock. That's important also to understand. So basically, node operators are the first who will receive Sophon tokens, except from community and from foundation. That's also a huge, for instance, upside here, because you will be the first to sell, and usually you will affect the price the most. Basically, you will have the highest price. But yes, that's briefly regarding the Sophon. With Sophon, there was 40 tiers with different valuations. So we participated in their public sale and try to stick to reasonable valuations for our side. And right now we will cover 2 projects which will have upcoming node sales and in which we have possibility to participate. So if you will be interested to participate in the sales, feel free to reach out to us. There will be a link to our investment club through which we facilitate such operations to invest in node sales. We will share the details, how we structure the deal, but overall, and what is the deal exactly, what the valuation is, and at which valuation we can join. But let's go to the projects. There is 2 major opportunities which are coming. It's Scarf and Rivals. So let's start with Scarf. Scarf protocol is a data framework for gaming and AI. And they had already an extensive traction as for today. So they had a large number of projects which are already using part of their infrastructure, which is not requiring a blockchain. So they have their storage layer and an identity layer, which is already used by, for instance, Ronin. There is a game which is already launched, and some other games which are using it with more than 2.5 million users in their products, plus 900,000 users who minted their Carve ID. It's basically the part of their core identity layer. Also, they have raised over $20 million from Hashkey Capital, as they backed by Consensus, and some other strong tier 2, tier 3 backers as Draper Dragon. So overall, they have a solid cap table, without maybe some loud names except from Consensus, but still it's a solid backing. And overall, we have reviewed this project closely, so if you will be interested to take a part and to understand it, feel free to reach out to us and we can share the opportunity. Let's also review the Rivals. So Rivals, it's AI-focused layer. So they will build their own layer 2 role app on Dimension. Basically, it is focused to calculate and solve AI problems on Dimension. That's the basic idea, to facilitate the data exchange and be as a data layer on a Dimension as well. They will have a number of products launched in their ecosystem for which they will need a validation layer where the nodes are the core of the validation layer. Let's compare basic differences in these opportunities and basically review the node offers which are already publicly available and which we can see. So at first, so description we have already reviewed, just overall what are the projects, what the offers. So with Scarf protocol there is a 40-tier sale backed by Impossible Finance. Also Impossible Finance were organizing sales for Sophon, for Acer, and for Xai, so they are really experienced in it. And all tiers will be available on public rounds. So there is also a public and whitelisted rounds for every node sale. So some portion of nodes, usually at higher tiers, are dedicated to partners, to venture capitals who could join straightforwardly at higher tiers. And part of fundraising is just done through this node sale, because it basically gives to investors not only the tokens as a rewards, but also a possibility to validate the network and participate in their governance partly. And with the case of Car protocol, we will have a 40-tier sale on Impossible Finance on 28th of May, so there is a bit less than 2 weeks left to the sale. And with rivals, we will have 20 tiers. However, public tiers will only start from tier 10. So it will be with much higher valuation comparing to earlier tiers. I can already say that we as a venture fund have possibility to join at higher tiers. And if you will be interested to join the rivals node sale, we can, as I said before, feel free to reach out to us, and we can discuss this possibility and the terms, how we organize it. Regarding the valuation and what is the numbers for the projects. So basically, the first year in Carve protocol, it starts with 99 million valuation, basically 100 million valuation, and the last 40th year is has staggering 10 billion valuation. So it's a big difference. However, I can say that majority of nodes are so they are not evenly distributed between the tiers, and about the third of whole nodes is located with valuation less than 200 million. That is important to understand. Also, the other third is located between 200 and 400 millions, and all the others are with more than $200 million. And for instance, if we will take other node sales, how they were structured and how much were raised. So for instance, right now you can even still join Aether node sale. It's still available. The problem is you will have a really high valuation, and probably the nodes with higher valuation won't be sold anytime soon, just because the valuation is so unreasonable, and return and exit is unseen in future, with even close future, like in long midterm future, 3 to 4 years. That's why there is still available, for instance, 40th tier, I believe it's available still at Aether, and with Sophon, cannot say for sure, but for sure 10th tier it should be available. However, as you can see, as you have already seen, they have still raised a huge sums of money, and basically they have achieved their first and foremost goal, to raise a large round in order to continue the development. Returning to rivals, they will have 20 tiers, as I said, with valuation range from 76 million to 1 billion. As you can see, there is much lower and narrower valuation range. However, the projects, I might say, a bit different in size to comparing to Carve protocol. Rivals is a bit smaller here as well. Regarding the traction, it is also important to understand, as a basic part of analysis, the traction which has already been made before the sale. Carve protocol had already staggering traction through several clients which they have enrolled. However, rivals haven't got any verified traction at this moment with some launched products. That's like a drawback for rivals. Regarding the nodes, node rewards, and how they will be distributed. That's basically also an important mention. With case of Carve, we will have lockup, which will be, I believe, a bit more than 3 years in total, with every 6 months a rate dropping every 25%. So first half of year will be a 5% unlock basically every month, which could be unlocked from 15. So basically, how the rewards will be structured, you will be receiving a so-called vCarve token, which you can unstake for Carve tokens in different time frames. So there is time frames from 15 to 150 days in case with Carve, and deteriorating unlock rate. With every coming half a year, you will receive less and less tokens. Comparing to rivals, they will have just a linear unlock over 2.5 years with same structure of receiving vested basically tokens, which you can unstake for the native token of the chain. With time, in case with rivals, it's time frames from 30 to 180 days. And the last but not the least is the verified airdrop. So as I mentioned before, for instance, for right now, Xaya is, I think, the largest project who already listed successfully and had a node sale. So they had an airdrop right after the listing to those who participated in the node sale. And for instance, Acer right now has a community program with incentivization probably for airdrop as well, but no one knows whether they will have an airdrop for the community, for the node buyers. And here we have a situation that basically airdrop for Carve wasn't verified publicly yet. And with rivals, they have a dedicated 2% of supply for node buyers at TGE. So basically, there will be 20%, 25% of whole tokens dedicated, both in Carve case and rivals case, 25% of whole tokens dedicated to node operators. And additionally, 2% airdrop in rivals case will be distributed just on the unlock to node operators. From tokenomics perspective, we had an image on Carve tokenomics as well. There is some room for possible airdrop, so we cannot say surely, but still there is a case it's cannot happen. So basically, we cannot guarantee it. While rivals has it. So overall, we can see that each of these projects have its strong sides and weak sides. So strong sides, I believe, for Carve is their traction. Also, I really like their progressive node reward model. So basically, you will receive more in the beginning and then less from time to time. You will when time comes, you will receive less and less tokens. And Rivals for sure doesn't have any verified traction right now, but they have verified airdrop, which will grant part of an exit for those who participate in the sale. Plus, they have a really straightforward model how you receive your tokens, which is also can be a good point for someone. However, another important mention is that rivals won't have high tiers available in public sale. So with the case of Carve protocol, there will be high demand for high tiers. For sure, we have already seen it several times, but you will at least have a chance to receive the nodes of high tiers. But with rivals, there is no even chance to receive high tier nodes because the highest tier for public sale is 10. That's a drawback here. But basically, how can you participate and take the most from node sales? Because as average user, even if you bought a node key, you have it. What you will do with it if you are not able basically to install it, to run it, and receive the full potential of the node? So basically, for such users, there is only two chances and two ways to exit. Is basically it's whether to have an airdrop and pray for a good airdrop in order to exit, or just wait when you can sell the node and sell the node. That's not the secure strategies, because you will need to run a node in order to receive the major portion of your investment. And that's where we can help you, because in our investment club we offer a model where we can set up and maintain your nodes and basically maintain the stability of your node infrastructure with short-term returns as airdrops, and also potential future, if you will need to sell the node, etc., it still will be an option for you, and we can facilitate with it. That's basically what we have already done with our partners in Sofon node sale. And if someone will be interested from this event to join, we will be there. So basically, we will set up all needed infrastructure for the nodes. We will be maintaining them themselves, and we will just share with you the profits. That's what will be what the model is, and yeah, that's basically it. In 3x Capital Club, we offer not only node investments, we have other types of investments as well. So traditional investments with tokens, SAFs. So if you're interested to invest and also to invest in new type of deals as node sales, 3x Capital Club is a great opportunity to do so, and we are sharing a number of deals there regularly. So feel free to join the club if you're interested. And yeah, I think that's it from my side. We can go to questions if there is any. So
Sure, Slava. Thank you for your presentation. That was super insightful, especially comparison table. I'm also interested to see the comparison from previous sales, like you mentioned Xai, you mentioned also Aether. So maybe later on we can do one that will describe previous sales and some results, because, for instance, Xai already did 2 airdrops, and the third one is planned. So I just saw yesterday an announcement and shared with my partner that they will do the next airdrop, where also node operators will benefit. So I think that's also interesting to track some results and maybe try to understand better the future opportunities from the perspective of the successful case that you mentioned already. But what is interesting specifically for me, and I think for our audience, is to understand the risks that are dedicated to this opportunities. So from your point of view, what type of risks do you see here? Maybe you can start and discuss rivals and Carve separately, or
sure. So from my point of view, if you have already chosen the project where you would like to participate in the node sale, the main risk at first, you need to clearly understand what is basically the bottom line of valuations, because you will see, as an individual investor, you will see a dynamic situation with tiers, and you need to clearly understand where you will need basically to stop, because you will have 40 tiers which you can buy like straight from the start, from the sale, and you need to understand what tiers are go for you or not really an option for you, because sometimes you can just try to buy some tiers and the sale will go that fast that you won't be in time to facilitate the transaction basically, and you will fail the transactions sometimes, and it will happen because there is a lot of people who are also interested in it. Another risk, I believe, it's partly in this comparison the traction. So I believe that for projects which needs nodes as its core infrastructure, the traction and verified traction prior to mainnet is key, because basically they will guarantee that you as a node operator will receive there will be at first a demand for a token. Someone will be concluding transactions, paying the gas. You as a node operator basically is the basic part for you, because you will also the important part is that you will receive rewards not only from node operator pool, but as a basic rewards for gas as well, because you will be validating the network, and that's also should be considered. I believe that's really important when you have a fundamental infrastructure project, and sometimes receiving gas fees from it can be more profitable than just some node validation rewards, because people are just really using it and it's a great product. Also, we haven't covered it today because basically we were covering the sales as well, but you need to understand what are the requirements of such nodes. Usually they're trying to make them as light as possible, just validation nodes with no hard computation. But if you have means to run nodes, that's also important to understand which software is needed in order to maintain such an infrastructure. And yes, that's, I think, some first risks which are I can identify here.
Okay, thanks, Slava. I think we will maybe provide one more article about this. I think the topic of the risks is very undiscovered right now, because we had just multiple sales in the past, and definitely there are many other things that we can discuss and find out together.
Yeah, that's true. The first, for me, the first unique part basically of this type of investments, basically you're not only investing in the node as traditional in the tokens, but you also basically invested in the infrastructure, because you, in order to receive the maximum output from your investment, you need basically to reinvest in the servers which you need to maintain, etc. And that's basically partly put your personal interest into the project, because when you invested in some project with token investing, you just start from the TG, you start to receive just tokens, basically. That's it. But when project is developing and you have a node running here, you basically forced to monitor it closely, because you don't need to skip any updates of the nodes, some crucial updates of the nodes, and that's also, I think, put more emphasis on the project here from the investor standpoint.
Sure, agree with you. Actually, we had very successful experience investing in Xi in the end of the previous year. We did more than 2x on the listing just from airdrop, and we mined a lot of Xi tokens, received a second airdrop, and there will be the next one soon. So it was really a successful case, because we did like more than 2x from the node sale, and I consider this as very, very fast exit with a lot of potential in the future, because project is growing, more games are launching, and what is happening that ecosystem projects are providing small airdrops to the node operators who are supporting the network and security there. So that's very interesting opportunity that has multiple exit strategies from my opinion, and definitely we shouldn't miss this opportunity. We also invested in Sophon sale. It was in the public round. I think we discussed it. It was fifth tier for us. So it's quite reasonable, but of course can be better in many cases. So yeah, we will prepare additional comparison, and I think during the next months we will offer more opportunities like that for our community and investors to participate.
Yeah, also I can add here, as you mentioned regarding the ecosystem projects, I think that's why I'm more interested to see the Carve, because they have already basically some projects which are running on their ecosystem without tokens and which have already traction. Mm-hmm. And I'm pretty sure maybe some of them will be sharing some airdrops, closed airdrops, just to those who were helping the run nodes on Carve, because it was part of their infrastructure. Mm-hmm. And that, I think, possible upside for Carve here as well.
Yeah, actually, what was interesting when we spoke with Sofon team, so they mentioned that also they already have some partnerships, so they plan to distribute tokens of other projects to node operators. So I think there will be a lot of opportunities like that, and Carve is definitely one of the projects that I'm personally will invest in just to diversify my portfolio. I think it's reasonable if we will have a good tier, of course.
Yeah, that's true. Yeah, and I agree on it. I think Carve here is a great possibility, and yeah, that's I remember from the calls with Sofon that they were mentioning some even tier one projects with whom they're partnered, so they could partner their launch as well with possible airdrop to like from one other to other. That's really interesting how projects are trying to bind together in order to distribute like more tokens to other communities to at the same time not to have a lot of like CBILs as they called, but at the same time to have as much as possible active community and to have more hype regarding the project. That's interesting how projects trying to find their way in the space.
Sure. Thank you, Slava, for your insightful presentation. And thanks everyone for joining us today. It was a pleasure to share our insights and knowledge with you. Wish you a wonderful rest of the day.